For the first time in quite some time, the Calgary real estate market has finally seen some sort of actual price reduction. Over the last 2 years, the single family market has absolutely exploded here in Calgary. You can even see last year we kind of hit a ceiling here, and then this year we have increased. Now, are we starting to decrease? Have we hit a ceiling? Is it for the same property? It's all over the city. Is it all price points? Let's go find that out. So the Bank of Canada has recently reduced the interest rate, and this is one of the reasons why I think people were kind of holding off in the month of August, because they wanted to see what was going to happen. Now that that has happened, let's talk about it. The Bank of Canada has reduced its interest rate from 0.5 to 0.25, okay? So it's a pretty nice decrease from the Bank of Canada. You can see that for people who have 5% down, it can, on average, reduce your interest rate by about $102 per month. And in terms of buying power, it looks like it's increased the average consumer's buying power by $20,000 when you are looking at the 762 price range. So let's remember, this is the benchmark price for Calgary. All price ranges are going to vary differently. This is spit off by ChatGPT, so let's take this with a grain of salt. And third, this does not even come close to replacing any sort of questions or conversations that you would have with a mortgage professional. This is a very high-level overview of what it could look like for some people in Calgary at these price points. If you have 10% down, it looks like it could lower your interest rate by $96 a month. The buying power continues to stay the same, around a $20,000 increase. And for those who are putting 20% down, it looks like it could average a $85, $86 per month decrease in your interest rate. Now, why am I bringing this up? I was in the thought process that there was a possibility that the Bank of Canada could reduce the interest rate by 0.5%, which would have dropped us down by all the way down to 4%. And I thought that if that happened, the Calgary real estate market probably would have seen another spike. But because we're only dropping by 0.25, you can see that the buying power is only increased by 20,000. But let's run the scenario and see what would have happened if they would have reduced it by 0.5. You would have saw a $200 decrease on your monthly payment, and you would have saw a average $40,000 increase in purchasing power. If they would have done this decrease here, I would be very confident in saying that the Calgary real estate market would actually quickly increase once again in terms of activity. Maybe not price point, but definitely activity. But because they did a modest 0.25% decrease, we're only seeing these lower end increases. So I would imagine we're still going to see some sort of increases in terms of activity, but not as aggressive as what it could have been if they did that 0.5. So let's actually look at what the Calgary real estate market has written about the single family homes in Calgary. If you want to read this on your own, skip to the next chapter, no worries there. Detached home sales fell by 14% compared to last year, as gains in home prices above $600,000 were not enough to offset the declines in the lower price range, which continue to struggle with low supply. So very interesting, actually. The lower price range have actually seen decreases in price, which is crazy because typically they're increasing in price and the upper price ranges are actually increasing dramatically. So very, very crazy to see this actual shift in what's going on in the market. In August, there were 2,011 detached homes available in inventory, with over 85% priced above $600,000. The improving higher end supply compared to sales helped push the months of supply up to nearly 2 months. While market conditions are still tight, this is a significant improvement from the under 1 month supply experienced in the spring. Shifting conditions are relieving some pressure on home prices. This spring was crazy, and it is actually great to see the market starting to slow down a little bit. I know that's pretty crazy coming from a realtor, but at the end of the day, it was very unsustainable. You can see that in March and April, the sales actually outpaced the inventory, which was a very clear indicator that the market was going to continue to increase. May we saw a softening, June we saw a softening, and June we thought it was more or less because of the stampede that was on the horizon. July, obviously, stampede was here. A lot of people take vacations. But again, in August, right, we saw a softening. So why is it softening? Maybe that people were waiting to see what was going to happen with this rate reduction. Maybe people just think that Calgary real estate has gotten out of hand and is too expensive. It's very hard to say, right? But regardless, we are now starting to see a softening. And I would imagine we're probably going to see a softening going into the Christmas holidays right until next spring. Is next spring going to experience the same type of increase that we've seen here? We'll have to find that out. We need to look at the economics. We need to look at the potential fall federal election that might happen this year and a lot of different factors. But let's start to break down these numbers, okay? This chart here is the same information as this, just in a numerical value, right? So we can see the sales are relatively the same. We saw a slight decrease in new listings, which is actually very similar to what we saw last year, 1,500. The inventory has increased ever so slightly, where last year it actually decreased. Getting used to this one. You can see that the days on market is now 26 days, which is somewhat on par for what it was last year, 24 to 27 around this time of year. You can see that the benchmark price, look at the difference, 696 last year, 762 this year, okay? I am somewhat happy. I am actually genuinely happy that the market is slowing down. This has seen a rapid increase. January of last year, 623. Now, look at this. What is that? 16, 18 months later, it is now almost, $140,000 increase from that time. So Calgary has seen a very aggressive uptick in price point. Are we at the top? I don't think so. I don't think we've actually seen the peak yet. I would imagine 2025 we're going to continue to see increases, but let's start to look at what happened in August before we start targeting our predictions. So this is the year-to-date sales of the single family market here in Calgary. You can see that we're actually down from last year. You can see 2021, 2022, when that big influx of people moved here, we actually saw over 12,000 sales. This year we're at around 9,000 sales, right? We're kind of on that 10-year average, right? 2014 was one of the last hot markets that we've seen. Look at all of the sales that occurred in 2014. 15 to 20, obviously very depressed years in Calgary. New listings. This is kind of interesting to see. I mean, this could be a good thing. This could be a bad thing, depending on how you view the market. We're actually on pace of where we were last year. This is an interesting number to see, just because the new listings are hopefully going to continue to increase. More people want to sell because maybe they'll think the market is actually at its peak, which will help balance this market out a little bit better. Look at 2021 and 2022. We saw a lot of new listings come on the market. That was just such crazy years. This year, we are at an extreme high that we've never seen before, but we are still seeing a healthy amount of new listings come to the market, and now it's starting to soften that market. So let's continue on. Now, let's just take a peek here. I really only concentrate on this area here, and I just want to touch on a couple of these upper things. This is a year-to-date average. So I don't really talk about the price points or the days on market because I just want to look at the months. But the year-to-date difference in the actual sales volume is fascinating. We are at 7.1 billion. That is an increase of almost 9% in terms of sales volume. Very clear indicator that even though the sales are down by almost 3%, the market has actually increased dramatically because the home prices have increased by a lot. You can see that the new listings have increased by 3%, which is a great sign. You can see that the inventory year-to-date average, the months of supply average is actually very similar to what it was last year. Clearly, we're noticing a slowdown, so this year-to-date average is going to actually most likely increase more aggressively. The sales to new listing ratio has actually dropped to 72%. The sales to list price average is still above 100%, but again, a lot of that was geared towards the craziness that we had at the beginning of the year. Now we're noticing a softening. It'll be very interesting to see if that sales to new listing ratio actually drops, and we'll talk about that in a second here. Days on market, price points I don't really touch on because I just like the actual month itself rather than the year to date. So, months of supply, very, very good indicator of what is going on in this market. Let's just zoom in to the detached here. So months of supply is a very good indicator of how fast the market is moving. If you're looking at certain quadrants of Calgary, it's very important to realize that every quadrant is slightly different. You can see that southeast Calgary here. If you look at the actual the indicators down here, southeast, this one here, you can see if you're looking at homes in southeast, it's still relatively quick, right? You look at the south, you look at the west, you look at north, right? These are all still under 2 months of supply. So if you're looking in these quadrants, you want to know what the price points are, and you want to realize that it's actually still moving relatively quick. You can see that northeast, east, as well as north have all actually, sorry, that's not north, that it is north, have all actually inched above 2 months of supply, which is getting more and more into that balanced territory. You can see that single family homes in the city center are very much in a balanced market. We shouldn't see a lot of shifts in price in this quadrant because we are above 3 months. But we'll touch on that when we get to that microeconomic outlook. So regardless, depending on where you're at, which quadrant you're at, it's very important to realize that every quadrant is doing something slightly different. They are still in seller market territory, don't get me wrong, but there are more inventory available at these quadrants, allowing a little bit more of a price easing, a little bit more options. So let's continue on. Now, benchmark price. Benchmark price is very fascinating. You have a lot of different price points here. You can see that, city center and west look like they're very neck and neck, but it's super important to realize that the benchmark attributes, which I actually don't have up here yet, are different throughout the entire city. So this link is actually in my description. If you want to know what these benchmark attributes are for the quadrants, go ahead, click the link. It's a free link through my Google Sheets, and I have actually gone and created this. So if you want to know exactly what the benchmark attributes are for city center and west, you can actually go here and see city center, and you can see west. And you can see that city center year built 1955, or west is built in 2000. Right? So if you actually put a year built 2000 in the city center, this would absolutely skyrocket, right? If the price points are similar, but the years are actually very different, if you actually bring the city center up to the attributes of west, this is going to be heck more expensive, right? So let's just remember that the attributes are very, very important to realize when you're looking at this chart, and the link is in the description. So let's skip on there. Year-over-year price growth chart. This is kind of good to know for those homeowners out there or those investors out there that just want to know how much their homes have increased. Maybe you are a buyer and you're just a little bit nervous of getting into the market. It's very good to understand how much these things are actually increasing. You can see that a lot of properties are still at that 10% year-over-year increase, right? The market is still increasing year-over-year basis, right? We looked at that January price. We looked at this month's price. There's a huge $140,000 increase. Are we still going to see year-over-year increases as we proceed into the winter season? That's what I'm going to be keeping my eye out for. But for those of you who are interested, thank you so much to everyone who's actually gone ahead and used this service. If you want to know what your home is worth, 123 4th Street in Calgary, you have to click the actual drop-down menu here. Let's see how long it takes. You have to click one of these here, and then you can actually go ahead and get my home value. Put your name in, put your email in, phone number. Myself or someone from my team will call you, introduce ourselves. If you're not looking to sell, that's fine, right? We're just here to help provide some value. If you want to know for refinancing purposes, that's fantastic too, right? We can help get you set up. If you're looking for a mortgage professional, that's fine. We can get you hooked up in that way. Just let us know. But either way, thank you so much for everyone who's actually utilized this service because it is very slick. So let's look at the microeconomic breakdown here. So I really like this chart. I think that this is a really good chart here. I don't know why I just made that bigger. Let's move it over. This is a really good breakdown of what is going on in each individual quadrant in Calgary, okay? So if you live in one of these quadrants, this could be useful for you. You've got your sales, you've got your new listings, you've got your sales to new listing ratio. We're down to 64%, okay? We were high 70s, 80%, meaning that a lot of properties that were listed in that month, or the number of new listings compared to the sales, was very, very high. We are dropping down to that 64%. We are still moving. There are still homes that are selling, right? The lowest percentage that I see here is about 53%, both in city center and both in east. But look at the price difference. City center is, on average, for those benchmark attributes of 1955, is around $951,000. And then you look at east, right? You can see these attributes here at $553,000. So it's very, very different for how much these homes cost, right? You've got your inventory. Look how much homes are left over in south compared to west, right? There is a very large difference there. Now, the sizes of these these quadrants are very different, but it goes to show that there are still some homes to choose from, especially if you're looking in South Calgary. Months of supply, benchmark price, year-over-year price, and month-over-month change, okay? Let's just look at some of these prices. Look how much we've seen decreases, right? City Center has seen a $13,000 decrease in the month of August. You can see the $10,000 decrease in Northwest, a $13,000 decrease in West. You can see last month here, let's move this out of the way. We did see a pretty sizable decrease in West. So over the last 2 months, West Calgary has seen a $23,000 decrease for those benchmark attributes. things are dropping pretty quickly. So you want to make sure that if you go on the market, you're putting your home on at the right price. Or for a buyer, now you can start to, pinpoint some homes that have been on the market a little bit longer, and you can select those homes and hopefully get a better deal, a better discount, negotiate a little stronger. Really depends on who you hire as a realtor to try to get that best possible price for you. But these things are super important to know, especially for those of you who are on the market, in the market, thinking about getting in the market. You really want to make sure that you're staying up to date with what is going on. Now, I do want to point this out super fast. It is super, super, super important for anyone to look at the market and actually understand what is happening. So this is the MLS, right? We're just looking at the last 30 days, single family homes. We need to be able to pinpoint and specifically touch on certain communities, certain price points, certain years, and see how much these things have sold for. Right now I have it listed as contract date. If you look all the way down, the most recent home sale was a $500,000 home in Monterey Park. Right? It was listed for 500. It sold for 500. It didn't go conditional. It was on the market for 1 day. Right? If we scroll down even further, right? When is the most recent sale? You've got two here. One at 988. It sold at ask price. One sold 749 at ask price. Right? These are just the most recent sales that have occurred. These were listed on the 31st, and everything else that is listed for the single family homes since the 31st haven't sold. Right? We want to make sure that we're understanding this. We want to know that in Calgary, in its whole, in its entirety, things are just not moving as quickly as what they were 6 months ago, right? 4 months ago. We need to put this in perspective. You don't want to go ahead and actually ask $1 million for your property, right? You want to make sure that you're putting your property on at a respectable price, because things are not as fast as what they used to be. So let's remember that. Go ahead, book a call. The Zoom link's in the description. If you want to go over these things in detail, please let me know. I'm upwards of 17 minutes here, so I need to hurry up. Let's continue on here real fast. You can see this red bar here. This is the benchmark price the benchmark year-over-year percentage increase or decrease from last year. You can see that we are quickly decreasing, right? We're still at around 10% year-over-year increase for single-family homes, but look at what we were back in, call that April or May. We were upwards of almost 15%, 13 to 14%, right? So how fast are we going to drop down year-over-year increases? I would imagine as the market slows, we're going to notice this going down pretty quick. So here is a quick view of what has happened for price points for single family homes in Calgary, right? You can see, look at this. We had a flattening in 2021. We had a decrease in 2022. We had a flattening in 2023. Now we're probably going to see a decrease in 2024, right? This is fairly common in the Calgary real estate market. Let's remember that. We haven't had this much inventory in a long time. So we might actually see some decreases going into the Christmas holiday, going into the spring. But are we going to see spring increase, spring increase, spring increase, spring increase? Are we going to see that again next year? Probably. But we'll just have to wait and find out. Is the market done? Are we going to see 2 to 3 more interest rate decreases going into 2025? Most likely. Is Calgary going to see an increase in price? Most likely, but we just need to watch these numbers and make sure that we have a good understanding of what's going on. So I'm not going to hit 20 minutes today. If you have any other questions, thank you very much for those of you who actually watch these things. Ask me questions in the comment. Go ahead and ask me questions. I'm more than happy to answer them for you. We'll see you on the next one. Peace.